Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for silver versus the US dollar. So silver price. We're looking at the weekly chart. So each one of these candles represents 1 week's worth of price action. If you want to stay up to date with all of our videos, make sure you click that red subscribe button on the bottom right hand corner of your screen. Okay, so we see silver on a long-term sloping uptrend going back to early 2000. More recently, since 2015, price has been kind of confined to this $14 to $18 price zone. There we go. If we look closer, 2016 we saw lows around $14. Those lows were tested again in the fall of 2018. More recently, prices plunged through all the way down to $11.50, and quickly shot back above, confirming that price is more than likely going to stay in this range for the foreseeable future. So if we were to follow this long sloping trend line, it could be another 10 years before we see silver break above the $18 to $20 mark. What's going to happen at this point is, even if this trend continues upwards, if we guesstimate by the end of the year it is up by $19 to $20, 18, it hits that ceiling. At that point, it's going to take some kind of fundamental market action to propel why it should be valued at more than that. Otherwise, price will typically just honor ranges that it's been stuck in, right? So we can even drag this down a little bit. Here we go. Here's the $18 mark, and you can see how many times, just in the last 5 to 6 years, that this $18 to $19 range is really held for support and resistance, more recently resistance, but this whole spike off the recent lows in 2020, that's a really good sign that overall silver is retaining its value. It's just going to real slow ramp upwards. Let's go ahead and look at our daily for intra-week action. So if we were to say this is the start of a new trend that's going to eventually travel back up to the top of the range, that's one way to think about it. We also want to be aware, right around $16 or so, $16.50, we have some we'll call it inter-range resistance. So let's go ahead and mark this yellow. That represents the equidistant equal of this support and resistance channel. And as you can see, quite conveniently, price highs back in early 2019, that was resistance. So good chance our next stop for price is in fact $16, $16.25, $16.50 in there. And then we'll see our next dip down. But if we think this is a trend that's going to test that, then eventually move up, we want to look at our 4-hour. And at this point, I'm going to ditch my volume. There we go. My 4-hour, I can take this trend line, which is our short-term intraday trend line, and essentially use this and say to myself, okay, looks like a decent place to buy. I'm going to put my stops below 1450. That's our most recent low, as we can see here. Because at this point, if a new low would be made, that would suggest the trend is, continuing to decline. It's going to, instead of reversing, what we'd see here is that this will be the ceiling, and price continues down. So this is the bullish scenario. If you were to buy here, you put your stops under 1450, under the most recent low. If you believe it's bearish, then you want to draw your chart this way. And say, okay, well, so if you're shorting it, you basically want to put your stops above 1650, which would negate the short, meaning that price pierced through this previous resistance, which is still there, and you say I'm shorting, and it's going to test the $14 low again and eventually fall out of that channel it's been in. So those are the two ways to see it from a technical analysis standpoint, depending on your overall belief. My overall sentiment is that price will remain in this range. Doesn't mean that you necessarily agree. So have a great week trading. I hope you make lots of money. Talk soon.